Hello and welcome to the Morningstar series, Why Should I Invest With You? I'm Emma Wall and I'm joined today by John Lowe, Head of Equities for Fidelity Investments Singapore. Hello, John.
Good morning.
So we're here today to talk about Australia. It's a region that a lot of people, I think, have written off because it is so dependent on commodities for GDP growth. But interestingly, there are still seemingly stock options to be excited about because it makes up more than 50% of your portfolio, Australasia, doesn't it?
Yes, it does. Australia is a very interesting market. I think you're quite right to say that people have generally written it off in the last few years because supposedly the super cycle in the commodity space has died off. But actually Australia is very interesting because you've got a whole slew of companies that are competing overseas outside of Australia, because the Australian market in itself is quite small. So in order for them to grow, they've had to look for opportunities overseas. You know, companies like CSL, Macquarie, QBE, all are leaders in their own spaces across the globe.
And of course, we've had some positive GDP growth as well. Last week, it was revealed that the economy grew 0.9% for the third quarter, and it's forecast to grow 2.5% for the year. Unemployment is low. So actually, it seems there's quite a lot to be excited about.
Yeah, it's been very interesting to observe how people have expected the absolute worst, that unemployment would crash because again of the commodity cycle. But as you saw in October, I think the unemployment number was at a 17-month low at just under 6%. So I think that the transition from the commodities side of things to infrastructure, and the focus has been on the new government's focus has been on infrastructure, has really successfully transitioned the economy along. At the same time, the low unemployment rate has meant that people still feel reasonably confident of their future, and so consumption remains robust, as we've seen in a fairly strong housing market, in particular on the Eastern Board.
You mentioned there that the companies you're looking for are those ones that are global with revenues outside of Australia. Yes. How worried are you then by the reliance on China of Australian companies because to do with that commodities and infrastructure sort of sector, has been a lot of China revenues? Yes,
well, the anxiety people have had has been the slowdown or the rebalancing, shall we say, of the Chinese economy, which has leading to drop off in commodity prices. It has been reliant, but a lot of these companies are competing in the US. The names I rattled off earlier, CSL, Macquarie, QBE, are doing business in the US, and the economy there is pretty strong. And look, the other aspect is that we shouldn't look at sort of the bigger macro numbers, because we need to look at, when we look at companies, we look at how companies compete within the particular space that they're in. And by looking at the sort of macro things, you might miss what's happening at the micro level within each of those different industries.
So these companies that you are invested in, are they sort of best in business across the entire Asia Pacific region? It's not that you're taking a play on Australia, or is it a sort of dual factor?
I tend to spend time on companies that are best in the industries in which they're competing, whether that's in Australasia or abroad. So I think, even for the companies that I look in China or Korea, which we could talk about, they have to be the best of breed, typically the incumbent or number one or number two in the space in which they're competing.
You mentioned there Korea. It's quite an interesting play. I've spent a couple of months in Asia Pacific, and Korea hasn't come up much, but it's a region you're feeling positive on.
Again, the view is predicated on the number of opportunities that that are presented to us. The market's deep and broad. You've got anything from a cosmetics company all the way to a deep cyclical, which seem these days to be trading at bankruptcy levels, which, business is tough, but arguably, things are not about to go completely pear-shaped. So there are opportunities right across the spectrum, and I think people tend to write off Korea, A, for its a lack of governance, B, perhaps it's also seen as a trade on China, which it completely isn't. Again, Korean companies are competing globally. If you think of Samsung, you think of Hyundai, these are names, 5-10 years ago you probably wouldn't really spend much time on, but today they're a meaningful brand and company competing again globally.
I think they've sort of taken over the technology crown from Japan there a bit, haven't they? I mean, 10 years ago it was the Japanese tech names that were really household brands, but now it's much more about those Korean names.
Absolutely. I mean, again, a decade ago, buying a Samsung TV or a Hyundai car, people were saying that, oh, that's the sort of cheap, almost Skoda equivalent option to buy. Today, it's a smart choice, and I think that goes. That points to the how they've advanced technologically, but also their ability to understand brands and how branding and how they've rolled that out across the globe.
John, thank you very much.
Thank you.
This is Emma Wall for Morningstar. Thank you for watching.